I've been responsible for the preparation of over 70 SECR reports, and these are carbon usage reports for brand names, people you probably will have heard of. They're big companies, multinational, certainly multi-site, etc. And when we're preparing them, we often see the same mistakes crop up time and time again. So here is my opportunity to point the mistakes out to you. So if you're doing a SECR report either with us and PLATO, the software we use, or on your own with a calculator, then you can maybe take a look at this and say, what are the 5 biggest mistakes people make when preparing SECR reports, and how do you stop making them? So mistake number 1, by far and away the biggest mistake that we get, the biggest problem we see, the biggest mistake people make. Number 1 is incomplete data. Incomplete data. That's data with gaps in. That's sites where you've got a site and you just haven't got the gas or electricity. It's where you've got the first 9 months of the year but not the last 3 months, etc. It's basically you've got gaps in the data. Now the legislation encourages you to have 2% data gaps as a maximum. It will let you stretch up to 3% of your electricity bills to be missing, or sorry, your energy bills to be missing. So, that's not a lot, 2 or 3%. If you come up with a situation that you just don't have the bills, the legislation's saying, well, why not? You need to make an effort to get the bills because they're required to calculate your footprint and your carbon intensity. So there's not a lot of leeway there for emissions and gaps. With getting the data, why does this problem occur? Generally people leave it too late. They don't allocate enough time and resources to actually gathering it. If you've got, so one of my clients has got sort of 70 sites, medium-sized, 70 sites, and actually getting the gas, the electricity, the company car fuel use, and the mileage reclaims, the basic nuts and bolts you need for SECR from those sites, is difficult. They're struggling. It takes time. Now, we've been working with this particular client for about 4 or 5 years now. We looked after them during ESOS as well, and they're now in the hang of it. But when we first started, it was a nightmare because the data was just spread in so many different places. So allocate enough time to get the data you need, because there's quite a lot of it. The second sort of tip I'd give you for incomplete data to try and sort that one out is if you can put a system in place that doesn't just rely on you. So if you're the lucky person who's been allocated the role of prepping your SECR report, if you've got to go out to 70 sites and chase 70 people, nightmare. Much better to have a chat to someone in accounting, see if they can help out, gather some of the data, talk to the regional heads, see if they can gather it for you, package it up and pass it across, etc. So if you can put some form of management structure in to help you out gathering the data, so much easier for you, and you'll end up with a lot less data, a lot less missing data. Second mistake, importance. I speak importance, and I'm going to put buy-in here in inverted commas. I speak to a number of people who they've been asked to be responsible for the preparation of the SECR report, but the rest of the organisation they're working with don't view as important. There's no buy-in from all the other groups that need to sort of feed data through to this process, and so then where you try and gather the data in, nobody's that interested. It's along the lines of forget about it, or I'll do it later, or I sent you all that information knowing darn well that the stuff you sent was for the wrong year or the wrong site, etc. So you'd be better off, I think, to tackle this by doing a couple of things. First is to get one of the senior managers there, just to make it clear to people further down the chain that this isn't optional, you need it. yeah, and please cooperate, etc. And the second route, I mentioned it earlier, but put a structure, put an organization in place so it's not just one person chasing the data for an entire company. That's a thankless task, it really is. If you are using a software system, if you've got, for example, one of the SAP or Oracle or PLATO systems in place, you can obviously give people logins to those so they can type the data in themselves. And with the auto reminder systems that are built into these softwares, I wouldn't say you can just sit back and take it easy, but it's much easier. So there you go, problem number 2, importance. Just make sure the organization understands that this isn't optional. You need to do it by law. There's a problem if you don't do it, and it needs to be done properly. Problem number 3, let's have a chat about scope. So what should be in your SECR report? I mean, if you've got one limited company and one site and you own all the assets, it's nice and easy, but life isn't like that. Chances are that you've got subsidiaries, chances are you've got leased assets, either leased cars or leased buildings, or you've got sort of small sales offices, satellite. What should you include? People very often get this wrong. So here's some rules of thumb for you. First off, with scope, if you've got a listing on one of the major markets, so for example FTSE and NASDAQ, you have to cover your global emissions. Okay, so one of the big markets, you have to put your global operations in. That immediately puts the amount of work up by, well, you just multiply it by kind of the number of regions involved, and then a bit more because you've always got the language barrier involved. And we regularly take data from European partners, and it's just a little bit more tricky to kind of do that conversion and then get the data in the system, get it in PLATO, just make sure it's correct. So when you're looking at scope, if you are listed on the main market, you need to include it, but not if you're on AIM. So, there was some research published by Deloitte, bless them, good old Deloitte, and they were saying that if you're on AIM, the paper they published, and I think it's becoming the norm now, then you do not have to include global operations. So check with your accountant, they'll be able to give you the chapter and verse. But when we advise clients at the moment, if it's AIM, we say, look, you just need to do UK operations. Okay, what about subsidiaries? Well, to start with, the scoping rules for ESOS are different to the scoping rules for SECR. ESOS has got this policy that if any part of a group, any one individual part is in ESOS, then everybody has to report on ESOS. With SECR, that's not the case. And if you've got a qualifying company at the top, say maybe Topco is qualifying for SECR, and your subsidiary is not qualifying, it's optional whether that subsidiary reports, which again is not the case with ESOS, but with SECR you've got this optionality built in. I would say 90% of people do choose to include it because then the SECR reporting figures marry up with the accounting figures, which are often done at consolidated group level. Another one for you is leased buildings. So, for example, how many times have I heard, we haven't sent you the energy information because we only lease the office, it's not ours. Well, it's probably something to stop and think about. If it is leased and you do not have control of the energy in that building, so for example you're not in control either of the specification or specification or replacement of the lighting system, you're not in control of the specification or replacement of the air conditioning system, etc. And I'm thinking maybe this is kind of like a leased Regis office where all you do is you pay a service charge and you don't get control about anything in there really. Your job is just to occupy, pay the lease, pay the service charge rather, and then get out. In those instances where you've got a leased asset and no control, you can exclude it from the scope of your operations. But just because you lease a building, if you are in control of things like heating, lighting, or you're the sole tenant of the building, then you really should include that leased asset and the carbon associated with the leased asset in your SECR report. Same with leased cars, but it's even easier. When you talk about company cars and the fuel that you put in company cars, it doesn't matter one iota if the company car is either owned or leased. Who cares? So you still have to account for that. But the fourth point is really basic stuff. It's errors in the calculation. And coupled with that, traceability of the calculation chain that you use to get the figures. So, what I'm talking about here is that when we look at working with the auditors, so they're working with the Big Four, etc., and they're saying, look, how did you get to this number? We produce typically a 30 or 40 page audit trail, and in our case it's easy because PLATO spits out the audit trail and the calculation methodologies. But we can defend how that number came to be, or how it's made up. In a lot of cases, if your SECR report is examined and you can't defend how the numbers are produced, it makes it virtually impossible to audit it. And to put this in context, one of the Big Four who went through a few of our reports, etc., on the stuff we do, they told me that they fail on average 95% of the SECR reports that they look at. So the biggest challenge they find is that the numbers just don't stack up. There's no real way of finding how they came to that number. So think about an audit trail, think about detailing every step, and again, if you're using one of the big software packages, be it PLATO, Oracle, or SAP, then fine, that probably is spat out for you. You don't need to worry too much. But if you're not, if you're doing it by hand, just take copious notes. One of the things that people get wrong is if you want to know the amount of kilograms of CO2 per kilowatt hour in, for example, electricity, the correct place to find that is in the government approved figures for that year. The incorrect way of finding it is just bash it into Google and taking the first number that is spat back. So, make sure you're using the right figures, make sure they're the right carbon factors, the conversion factors, make sure you detail the results, write it all down, and as I say, if you're using software, be it ours or someone else's, it just makes it so much easier. So there's your fourth. Errors in the calculation, just basic errors, and also traceability. How did I get there? And that's all linked up to the audit trail. Very important document. Okay, the fifth and final mistake we see with SECR reports is the selection of the carbon intensity ratio, which is closely linked to the energy intensity ratio. They're both things. The carbon intensity ratio says I generated this number of tons of CO2 or kilograms of CO2 per something. Okay? Now, the idea here is that if your company is growing, you want to know whether you're doing a good job reducing your carbon use or a bad job, because just because your company's got bigger doesn't mean to say all the good work you're doing for your carbon reduction projects is not working. So what you do is you try and scale your growth. A lot of people will use, for example, kilograms of CO2 per product produced, kilograms of CO2 per pound turnover, kilograms of CO2 per staff member, kilograms of CO2 per square foot, etc. So where's the difficulty in that? It sounds easy, doesn't it? Well, difficulty number one is if you don't choose one of the standard, the big metrics, which is kilograms of CO2 per pound of turnover, or kilograms of CO2 per square foot, or kilograms of CO2 per staff member. They're the three kind of the big ones that people use, and I've got to admit, I've got a leaning for kilograms of CO2 per square foot or kilograms of CO2 per pound turnover. Then if you don't use one of those, and if you use one of the kind of metrics of, for example, one of my clients makes vaccines, and they were looking at doing kilograms of CO2 per dose of vaccine produced. And the challenge there is their plant, their operations are large and diverse. Is it fair, for example, to have one figure which incorporates their CO2 per vaccine produced in the UK and the site that they have overseas? Or should you have two figures and actually they've got sort of several manufacturing components, and so should you have several figures, in which case how do you blend them together? You know, what's one way of the board looking at the kind of the intensity and just making sure it's going down, because you might say, well, actually we just moved production from here to here. There might be perfectly valid reasons for doing that, and it might be a good thing to do for carbon use. But you've got this issue here of choosing something that is easy to understand, measure and reproduce year on year. And I'll give you another example. One of my clients makes a cable made out of with a stone surround. So they heat the stone up to put around the outside of this cable to protect it to a very high temperature. It takes a lot of energy, and they produce that in one part of the plant. In a different part of the plant, they manufacture solar panels. So what do you have? Do you have one intensity ratio that covers both? For example, kilograms of carbon per ton of material produced. Do you have two carbon intensity ratios? If you then have two different sizes of cable, one big, one small, do you have, you know, one intensity ratio for the large cable and one for the small cable? You know, you start all sorts of minefield of you know, getting the right intensity metric. If you are a manager who's responsible for a single production line, then go for it. This is right up your street. You can do that and it will make sense. But if you are a senior manager in a company trying to compare the intensity metric across a group of diverse operations, then you'd be better off just choosing kilograms of CO2 per pound of turnover, or kilograms of CO2 per square foot. Something nice and easy, and it takes the growth of the company into consideration. But if it's not easy, and choosing the right carbon intensity ratio or energy intensity ratio is a bit of an art. So again, people trip up over that. So there you go. 5 biggest mistakes people make. We see them day in, day out, time and time again. They're probably in order of severity. The biggest one by a long shot, incomplete data. That's probably caused by not having the right structures in place, getting the scope wrong in the first place, not including things that should be included, or vice versa, putting things that shouldn't be there, which leads probably to double counting on somebody's sort of set of figures. Errors, and making sure you can trace them back, and you've got an audit trail to refer to. And finally, selecting the right carbon intensity ratio so that you've got something that's both useful to you, you know, to try and help you save carbon, and yet it is not so complex that nobody either believes it or figures out how it's being worked out. There you go. I hope that was useful. As I say, you know, a lot of these problems are sorted out or solved if you use a software platform, and if you want details of the platform that we use to generate SECR reports, and you know, a large number of them on a regular basis, check out the links below, and just click on the link through to PLATO, which will take you through to a page describing, you know, how PLATO can help you sort some of these errors out. For example, on incomplete data, if you're looking at a grid, if you've got a data gap, it just shows up red. So nice and easy. There you go. I hope that was useful.